Stop what you're doing right now and listen to this. If your charts are full of indicators, this is probably why you're losing. Because the most consistent traders I know use less, not more. And truthfully, more indicators don't bring you more clarity. All they do is just give you a reason to hesitate. And simple traders see the same exact thing every single day. That repetition builds confidence, and that confidence leads to execution. If ain't nobody else gonna say it, I'm gonna say it right now. If you can't explain your setup in one sentence, you're doing too much. It's way too complex. Let me know right now, how many indicators you got on your chart? I'm gonna be real, I'm rocking 3, but y'all see how my charts look. So let me know down below. Drop it in the comments. How many indicators you rocking? The thing is with indicators, they take away from what's actually going on. When you just rely on the indicator too much, when you rely too heavy on the indicator, it leads to hesitation. You can't go into the markets waiting for an indicator to just give you a signal to hop in and hop out all the time. Man, at times you gotta just have that inside of you to understand and to be able to see this is the time to get in right now. An indicator is not gonna be 100%, but what can be 100% is your approach. If you use, an indicator as your approach 100% of the time, and that's just how you trade, then okay, albeit. But I'm gonna just be real with y'all. An indicator is not gonna make you profitable. The indicator is not gonna make or break the profits that you make. Let's be real. It's about what you're seeing with the charts, with the candlesticks. The candlesticks create the story. An indicator is a lagging tool. The first thing that you see whenever you get onto the markets are the candles. So just judge the story based off of that, not what the indicator is showing you. I like to tell everybody this. I don't use indicators to make or break my decision. I just use them as a confluence, either an added confluence or a confluence I see going in an opposing direction. Because you got to be realistic with yourself. You can't just look at how everything's going to be green and just go your way. You have to look at it from an objective perspective at times, and that perspective leads to you being able to depict exactly how this thing could go wrong. An indicator can tell you that. Let's say, for example, you're trading a bullish trend, right? Price is going up. We up, right? And then now you see us break structure and we're pulling back. Okay, cool. Let's say you didn't know that we were breaking structure, but you seen us retesting the EMA from the bottom instead of bouncing off of it, continue in that upwards trend. Now we're breaking it and then we're rejecting it. We're pulling back to it. That's how you can use it in an inverse way if you were trying to ride the buys and continue buying with the trend. That's how, you can just use the indicator in an inverse way just to protect yourself. Maybe this isn't a trade you want to hop into because you've seen what just happened and the indicator gave you that. But besides that, you would have known the story first originally from the candlesticks. The candlesticks would have broke structure before the indicator would have caught up to what's actually happening right now. Hey man, I say all that to say this. Y'all gotta trade with y'all's eyes. Trade what you see. Don't trade what you being told. Don't trade exactly what the indicator is showing. Trade what you see. Trade your setup. That's what's going to get you profits at the end of the day is your setup. An indicator is an added confluence, but don't make it your whole thing. Don't make it 100% your identity in these markets is I'm a trader that reacts based off of what an indicator tells me to do. I don't subscribe to that idea. Indicators is useful, but simple traders win. I'm just saying, simple traders win. They use indicators, they do all that. The less you do, the best you perform. Remember from the last video, I told y'all less is best. So in this example, it still applies. Less on your charts, less clutter, the more you can see what's going on and the more clarity you have overall. The more you can see, okay, this is now a good time to buy. I don't have too much clutter on my charts. It's not like, it's too much going on, chaos all over the map, and I don't even know what the hell I'm looking at. It don't look like a science experiment. It looks like trading. It looks like charts, candlesticks, all that. And we're just trading the movement. We're trading the trend. Sometimes it's even hard to catch the trend based off of however you got, what's on your screen. Because sometimes on the screen, it'll clutter up what's actually happening on the charts. And the candlesticks, you can't really tell. So my recommendation, learn how to read candlesticks, learn how to read price action. Don't depend on the indicator. Follow your strategy, follow your setup. Take it day in and day out. Whenever the opportunity comes, don't force it. Less is best. Continue to grow in your journey and continue to watch the videos because we got a lot more good content coming on the way. And that is it. That is all. That is everything for this video. You already know, just like I said, more good content coming on the way. If you want to watch another good video, be sure to click on the last video dropped. We got another good video dropping tomorrow morning. I know this is kind of a late one. We got out of work a little bit later. As y'all can see, I'm still in the work clothes. So good video dropping tomorrow, noon. Be prepared. Stay ready. Don't get ready. I'm going to see y'all in the next video.